Hello and welcome to Securities Lending Saturday, where each and every week I take you through an important topic related to the subject of securities lending. My name's Roy Zimmerhansl. I'm your host, and today we're going to be talking about the third quarter and year-to-date revenues in the market, give you a few observations and comments. It'll be a quicker show possibly than normal, but you never know until we get started. So if securities lending is something that you are interested in, you are an institutional retail investor, you borrow or lend, or you're part of the ecosystem that's part of the business, or if you're just interested in learning more about securities lending, then this is the place for you. Let's get started. I never go far without a slide deck, and today is no different. Listen, I'm always thankful for anyone that joins me and watches in. So if you are watching, drop a line in, say who you are and where you are coming from. And we're live on LinkedIn today. Tomorrow, Sunday, the 14th of November, it'll be available on YouTube as part of the Fundamentals of Securities Lending series that I've been doing now. This is week 27. V, fantastic to see you. Glad you could make it back. I don't know if that's because of the time zones or what, but whatever it is, I'm thankful that you have joined me again this week. So you win the prize. If I ever start doing prizes, I think you are going to be the one who gets the first prize, or at least you'll be the first one to get to 8 episodes with the next episode free. We're going to be talking about, as I said, the revenue in Q. That's what we've been talking about over the past 6 months, because we're a little bit over 6 months now. And next week, we're going to be doing a video on short selling. So I have been asking over the last couple of episodes whether people wanted me to do a session on short selling. I've had quite a lot of private messages with people saying, yes, please. So I'm happy to do that. As I said, today we're going to talk about the revenue performance for this year. We're going to talk a little bit about equities, fixed income, and the top contributors, which I think might surprise a few people in terms of the impact that a handful of securities can have on the overall revenue picture. And for those of you that aren't lending, I think it'll be really interesting where you can say, hey, I don't have to have a full-blown program to make quite a lot of money. So let's just get started. As always, if you really like these videos, please give us a thumbs up or a like wherever you're watching this, live or on. If you want to see every video that comes up, please hit the subscribe button. You'll be notified. If you ring the bell, you'll get a notification every time I post a new video. I did 2 last week. I am hoping that I'll be able to do that kind of midweek session. One of the things I'm interested in getting feedback on is every week for my private members club, I do a little bit of a news story with sort of the 5 or 6 news items over the previous week and why I think they are important and relevant for securities lending. I could turn that into a midweek video if you guys, that might be interesting or helpful. So let me know. I'd be interested. Put something in the comments as to whether you think an update on related stories. So sometimes it's about prime brokerage. So last week it was about Credit Suisse exiting the business. It's also about repo. It's about all kinds of aspects of the business, collateral, what's happening with the markets themselves, short selling, all stories that I think tie into the business one way or another. So put the comments in. Let me know if you think that's a good idea. Let me know if you think it's rubbish. This is why I'm asking your opinion. Now, the other thing about the subscriptions is we're trying to get to 500 subscribers on the channel. We're at 337 today, I think. And the reason we want to get to 500 is if you get to 500, YouTube opens up the community tab and we can have a lot more dialogue. I can share a lot more information. We already do that in many different ways, as I said, for the membership club, but I also run the LinkedIn group and we have our blog posts on our website. So there's lots of different venues and I'd love the opportunity to share that with the wider community, but you have to help me. So if you like this, please tell other people about it, ask them to subscribe. And if we can get to 500, then I think I can share even more information with the community. Let's go. Right. 2021 year to date. There's a lot of green on this page. That's a good thing. The source for much of the material from this session is from DataLend. So you can just go to datalend.com and you'll find it there. What I've just pulled out is the total lender revenue so far. So this is where institutional investors, retail investors, they lend their securities to typically brokers and banks and securities firms. So that sort of end user on the investing side to the end user on the borrowing side, that's actually hit 2.3 billion year to date. That's for the quarter, sorry, and that is up 33% year on year. So that's actually a pretty darn good figure, going up by a third. What's gone into that? A number of things, not least of which was the elimination of the Korean short selling ban, which stopped a lot of Asian revenue. And you'll see that come out in the figures. If we just look at the month of October, so this on the left, that's end of third quarter. So that's end of September. Is that 33% trend continuing? Yes. The answer is obviously not only is it continuing at 33%, it even notched up an extra percent. So in October, there was another 821 million made that month. So all looking quite good. So how did we get there? Let's talk a little bit about a couple of the key drivers here. One is the increase in fees for Asian equities, which has gone up by 27 basis points to 105 basis points per annum. That's over a 25% rise. That's pretty impressive. Again, part of that is Korea, but Korea is not the only story. And I'll show you some information in a minute on that, a couple of quick graphs. So that's part of the story. The other part of the story is an increase in on loan value for North America. And so part of that, remember, since the loan value is tied to the value of securities, the reality is when you have a market rise, the value of securities loans goes up. So let me give you an example. If you have $100 on loan and the stock market goes up 5%, now that same stock is worth $105. So some of it is market value itself. Some of it is increases. So we've seen huge rises in a number of stocks. We've seen some new activity. The IPOs continue to do well. SPACs have come off a little bit, but the reality is the market's just plowing ahead. Exchange traded products, again, really super much in demand. So North America increases, as it says here, 23% year over year. So there's no short selling bans in the US. This is just incremental volume and value on loans. So just that, no matter what's happening with the levels or the fees, that will increase the returns for the entire market. So pretty powerful figures. 2.3 billion for Q3, another 800 million in October. This is shaping up to be a great year. And I told you I'd just show you some kind of indicative charts here. So the source for these charts is IHS Markit, as it says up there. And these are some charts where they give indications at kind of an index level as to what's happening with the return of portfolios on loan. So this is, as I say, the securities lending return to lendable. Don't worry about the differences between low, mid, and high. But you can see subtly with all of these trends, you can see that's a rising trend. Now, I hate charts that have big outliers like that. So, of course, it's important to know. But when you get one outlier there, or two in this case, it kind of distorts the output from the rest. And as you can see, though, if you just look at this orange line, it's gone from about 3 basis points on the portfolio to probably over 6. So really a really powerful move there. And then again, the same in Japan. So they do Asia ex Japan, and then they have Japan as a separate chart. And again, you can see a generally rising trend here. So that really bears out what we saw in the last slide, where it said that Asian returns were really an important driver. That's confirmation of that. If we go from equities into fixed income, government bonds and corporate bonds, like really incredible quarter and year to date. So as you can see, government bonds, the revenue was up for October 31% year on year. And the balance is up 21%. Actually, let me talk about corporate bonds. So saying that corporate bonds, look at that, 81% increase in return year on year for corporate bonds. And the balances went up almost by 50%. So why is all of this happening? First of all, for government, again, if you've been watching any of the series, or if you haven't been watching the series, I'll put a link in for the collateral sessions as to what the drivers are, maybe on the trading ones as well. The reality is quite a lot of government bond borrowing over the past several years has been to obtain collateral to use as valuable commodities in central counterparty clearing, other bilateral obligations like repo trading or other exposures that you might have. Primarily, that other exposure, the big boost last month was the implementation in September of another phase of UMR, the uncleared margin regulations, which require uncleared derivatives, so your bilateral derivative exposures, to be collateralized with your counterparties. Now, everybody that's a collateral taker wants to have the best collateral. So, of course, they want government bonds, and that's been a big driver of it. Okay, so part of the government bond story is from the demand for borrowing to use as collateral. The other reason why you might borrow a government bond is just to have them sit on your balance sheet for liquidity coverage purposes. So one of the big regulations that came out after the global financial crisis was the need for banks to be able to demonstrate to their regulators that they can operate for 30 days or 1 month without needing external funding. Now, how do they do that? Some of it is internal cash flows. If they have the cash to do, that's great. But also a big part of that is they hold government bonds on their balance sheet, which the central banks and their regulators will take as equivalent to cash because they know they can always finance that at the central bank. So if the world dries up, they have good collateral. The bank will take, central bank, and give them cash. So it proves that. So sometimes for use as collateral externally, sometimes to hold in reserve to prove the liquidity purposes. So that's been a part of the story. But one of the things that's common with both of them, we start seeing discussions about tapering finishing. We see moves that there was an expectation that the UK government was going to increase interest rates. Now, that didn't happen, but you could see that there's a powerful movement there. And everyone was watching to see what's happening. So I think what you'll start seeing is more expectation of increasing rates. And when you have increasing rates, look, to me, that's a game changer for securities lending. It's a game changer partly because you start to get more demand on the fixed income side. So that will change skews because people will start going back to trading the bonds themselves. And I think that's been a big part of corporate bonds where people are saying if companies have higher financing costs going forward, what will that actually mean to the companies themselves? But part of it is differences in foreign exchange expectations, which are also inextricably linked to interest rates. Okay. So look, any more discussion or uncertainty or certainty of views going forward where you'll see differentials in interest rates, I think those will drive more bond borrowing activity, but also from an equity perspective, where you see cash collateral, maybe at about 40% of the marketplace today. When those interest rates start generating higher returns for investors in the money markets, that will make agent lenders and their clients a little bit more interested in taking a little bit more cash collateral because they can generate incremental returns. So as we start to see interest rates rise, don't be surprised if you see a little bit of a shift moving from non-cash to cash. Now, it won't fundamentally change it, but you will start to see a rise. It also means that if we get anywhere near to the interest rates of the old days over the next couple of years, we'll actually see people trading maybe even on a positive basis in order to generate securities lending related cash rebate returns that are much more attractive than they are today. So interest rates are a game changer. We can already see it having an effect in October. I would expect to see that happening in November. Year end, you can never tell. It's a crazy time, year ends, but certainly I'd expect another good month in November. Okay, so a very quick comment again from DataLend today. One of the things that they produce is top 5 contributors. So these are the securities that generated the most income in that month from securities lending. And look at that. Those 5 stocks generated $105 million of revenue from the total market of 820 million. Like, that's an incredible figure. And it is that kind of distorted scale that you would expect to see. So this doesn't surprise me, but I think it surprises a lot of people. We did a video and a blog post last year where we talked about one year where Citibank, just Citibank shares, generated about 10% of the total marketplace I think I can't remember. It was 2010, maybe 2011. Um, just lending Citibank shares for about 8 months of the year generated 10% of the total market income. So this kind of outsized contribution from a small number of securities is a real thing. It's also one of the things that I think drives retail investors and their increased participation. If you look at the retail brokers that have fully paid share lending programs, or where they have some kind of subsidy for clients in terms of free dealing. Look, these are the sorts of stocks that make a massive difference to those customers. And you'll see that in the figures from those brokers that do fully paid lending, some pretty hefty returns over the past year. This is where because many of the big index names, those aren't the names that generate a lot of revenue. They might have high balances, high amounts on loan, but since they're so widely available, the fee levels are very low. So the amount of absolute return that they generate is relatively small given their size. These stocks make all the difference. So if you're not lending, maybe you should think about it if you're holding any of these stocks, but just be aware, obviously there's risk with anything. Talk to a professional before you do anything, but there is some big money to be made. Okay, I really wanted to actually pull that out for you so you could see just how impactful a small number of securities can be. Okay, I'll say for I think the third week in a row, I'm still recording this course. I'm pretty confident I'll have it done this week. We also have our free primer and the Big Daddy Introduction to Securities Lending course. So head over to our website, www.pierpoint.info, and look at courses, and maybe you will be one of our next students. I'd love to have you join me. There's also options there for one-on-one coaching, which I'm always happy to share my time with anyone that's as interested in securities lending as me or wants to be. Okay, let's just do a quick summary. I told you today would be shorter than normal. 2021 revenues, equities up. So we see both balances and fee levels in general rising. We see fixed income up with, as I said, to me, I expect a positive outlook and even more activity than normal because look, at the end of the day, over the last decade, fixed income has only been valuable for collateral purposes. Now we're starting to see real revenues starting to make a good contribution again. And then find that slide where we showed the top contributors really dominating the income generation picture. Again, that's always the case. Now, it may not always be of the returns. It is around that figure pretty much most of the time. So if you're not doing it, think about doing it. Okay. Next week, as I said, we're going to be doing short selling. If you have questions beforehand that you want to see me answer, again, please drop them in the notes in the comments below. And I look forward to seeing you next week. I've given you back some Saturday time. If you see me every week, you know it usually goes on about another 20 minutes. You now have 20 minutes free. Enjoy your Saturday. Enjoy your weekend. Enjoy your week. And I'll see you next weekend. Thanks, and see you later.